Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, they're talking about the Fed bailing on this 2% inflation target. That has a lot of implications for the markets and your portfolio, but we got the game plan for you. You're not going to want to miss this one. Let's dive in.
Trade Genius.
Hey guys, I'm gonna tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
All right, Bob. So, there's all this chatter about, the Fed should abandon the 2% inflation target. What do you think?
Yeah, well, I mean, look, I think it's just pure physics, right? There's no way they can bring down inflation under 2% without seriously harming the economy. I mean, like irreparably harming the economy. They've already killed off the housing market. They've killed off the auto market. And then retailers now going into Christmas are blowing up left and right. So yeah. I think it's a matter of time for them to say, you know what, we got to take the boot off the neck here. And I think they're going to declare victory and let inflation run hot.
Yeah, I agree with you. If they do that, though, I think the working class is just going to get destroyed. I mean, they're already on their heels, and this is just going to be like, I don't know how they're going to do it unless you have assets to inflate against. It's going to be tough for a lot of people.
Yeah, it's going to be like third world countries, where in third world countries everybody grabs the dollar, right?
Yeah.
Well, here where the dollar is a reserve currency, people are going to have to grab something else, right. and that's going to be the precious metals. It's going to be required assets like oil, natural gas, and it's going to be digital currencies like Bitcoin.
Right.
And so kind of where we are here, this is pretty interesting because the argument today, Phil, is are we going to have a bear steepener or a bull steepener? And I put up here the definition of a bear steepener, just what the hell is a bear steepener? It's really when long-term rates are rising faster than short-term rates. Right. A bull steepener is when long-term rates are converging with short-term rates. And it's really when inflation expectations pick up. So it's either going to be one or the other steepening. So it's not a given it's going to be a bear steepener. On Sunday, they talked about bear steepening, and then today's Wednesday already. Yesterday, they talked about, well, maybe we're going to get rid of this inflation target, and they're seeing the economy slowing down. So I think, there's an equal chance we're going to get a bull steepener on that. And we're going to explain to you what you do with that in a minute. But Phil, I'm going to throw this back to you because I think the bull steepener is in the cards because of this chart that you're going to throw up here for people right now.
Yeah, I mean, either way, it's a steepening of the curve, right? So typically at this point in the cycle, when you've had and we've had an extreme yield curve inversion, and now you can see there on the upper pane to the right there, we got that circled area that we're currently in, and we've bottomed out on the yield curve inversion. Actually, we did that in May. Okay, so this is a weekly chart, and we've projected out what we could expect to see as the yield curve steepens and gets back into more normal yield curve readings and get back above zero, get out of this inversion. But whenever that yield curve does that, given the setup here, we've got extremely bearish effects on the equities, on the stock market, and you can see what we're in for. And from a yield curve inversion this deep, like the last two recessions has given us 100 weeks. So Bob, for me, if we really are going into a recession, I think what we're going to see is we're going to see the bonds rally. We're going to do a bond bull market. Yields are dropping. The front end will drop more than the back end, in my opinion. And then I think we're going to see the stocks, the equities. Right now, they're kind of correlated with bonds, right? Bonds go up, equities up, and so on and so forth. But I think we're going to see them get into a negative correlation. And to me, that would be an absolute confirmation that we're in the thick of a recession, and also it would be in the thick of a bear market. And then we'll see this thing probably bottom out into 2025.
Yeah, I agree. If you want to throw the next chart up, I'm going to show you how to play this. And the market's been telling us something all week. So I think the market is front running the environment where, gold and silver has been up. Gold and silver miners have been up. Healthcare has been up. The bonds have been up. And the financial service and technology are down. Banks are in trouble. Tech, even though NVIDIA reported out today, the growth rate is slowing. A lot of the high beta tech didn't follow along today with we expected this pop in the market through Wednesday.
Yeah.
So I think you're seeing this rotation now. And if you look at this circle we have here, the inflation trough. So it's either going to go to a bear steepener or it's going to go into a bull steepener. And we think it's going to drift. It's going to go counterclockwise, and I think people are going to get defensive because at the same time inflation is rising, the economy is faltering. And don't let people fool you with these fake GDP numbers, because all it really matters is what is the GDP growth over the inflation rate. And I'm here to tell you that inflation is running hotter than GDP. Hence, we're going to roll into that bull steepener. But anyway, take a picture of this, guys. Keep this. So you got to pay attention to it. And I misspoke earlier when I said convergence. That's when it flattens. So I didn't mean that when I said that earlier. This is where the yields stay expanded from each other, but either rising together or falling together. So I think we're in the steepener mode, Phil. And then once we go into full-on recession, we're going to be flipping right up this clock backwards, and cash is king. So cash and bonds are king.
Yep. So you're in the bull steepener camp. I'm in the bull steepener camp. What camp are you guys in? We want to hear from you. Let us know below. Are you in the bull steepener, bear steepener, or you think it's a bear flattener, bull flattener type of situation? Let us know. I also like the fact, Bob, and it gives you a little cheat sheet over there on the side there. First rate cut, right? Materials, healthcare, staples should see inflows, or at least fare better than financial services, technology, and communication, which if that's the case, then most of this AI bubble stuff is probably going to give us one big fat round trip as this thing progresses on.
This is a great chart, guys. Enjoy it.
Awesome. Thank you, Bob, for sharing that. And thank you guys for tuning in. Please hit like and subscribe. Set that notification bell to all if you can. It helps us out on the algorithm. Post your comments below. Check out our stuff at tradegenius.co. We've got specials and the newsletter, which helps you navigate the markets day to day. We'll see you on the next episode. Take care.
Trade Genius.